Yes, I think it does make sense to see some discrepancy. The situation in Europe is somewhat different than in the US or the UK, with inflation expectations being more firmly anchored, being anchored below the inflation target, and with wage dynamics being much more muted. So eventually, of course, also the ECB will have to normalize policy, but they're not in a rush.
What's been fascinating about what's happened in the UK today is that we've had this hike of the interest rate from the Bank of England. At the same time, we've got Rishi Sunak over in the Chancellery pushing through some supportive measures to try to help people out with their energy bills. In the Eurozone, it's a different story. Fiscal policy completely separate, and it's not done at the same level that the monetary policy is conducted at. I wonder to what extent the rise in energy prices could jeopardize the recovery in Europe from a consumption perspective.
I think also in the euro area, we are seeing some price pressures, obviously eating into real disposable income growth and into consumer spending. But in terms of the size of the impact, it's still much more muted than what is projected for the UK. And inflation, if anything, is expected to moderate in the course of this year. When exactly it will peak, whether we saw the peak already or whether there's still a little bit of room to run based on sort of current forward pricing, or whether it's on natural gas or oil, remains to be seen. But generally, this spike and the massive reset in energy costs that the UK will experience in April will not happen in the euro area.
And, you know, all is not fair in love and war, Elga. Inflation is dispersed differently across the Eurozone. Of course, in Germany, you're seeing almost at 30-year highs. But Michael Houston of CMC Markets pointing out just this morning that in the Baltic states, CPI is already above 10%. What are you noting in terms of inflationary pressures across the Eurozone?
Yeah, so we are seeing a discrepancy in inflation numbers, but obviously there's very little that the ECB can do about these discrepancies, which have a number of different drivers. The ECB really needs to conduct monetary policy for the euro area as a whole. And there also we see a material inflation overshoot at the current juncture, but over the medium term, inflation is still expected to come back down to the target and eventually ease slightly below it. And that's, I think, the reason why the ECB is not as rushed as some of the other central banks.
And we are, of course, waiting to hear from Madame Lagarde herself, and we will pour greatly into the language she uses. But what did you make of the language that we just got out of the initial announcement with regards specifically to the balance sheet?
Yeah, so in terms of the monetary policy decision, as expected, there are no major changes at this meeting, with the exception of the small tweak to the language at the end of the statement that you mentioned earlier. But now the question is really for the press conference, will she be leaning against market expectations more explicitly by again ruling out rate hikes in 2022, and the statement with respect to the balance sheet and the continuation of QE in the remainder of this year would suggest that she's minded not to raise interest rates this year.